Bitcoin reaches block height 900,000. Rich Dad Poor Dad author Robert Kiyosaki warns his followers to prepare for a nasty summer by stacking Bitcoin. And Connecticut proves you get Bitcoin at the price you deserve. We will talk about all of that and more on this episode of the Bitcoin Bulletin Podcast.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Guten Tag, buenos dias, Morian, and welcome to episode 220 of the Bitcoin Bulletin Podcast. What a difference a week can make. Since last DCA Wednesday, we have seen unrest starting in Los Angeles and spreading to other major cities. Of course, last week I talked about how important it is to make sure your Bitcoin seed words can survive a natural disaster like a hurricane, since June 1st is the official start of the Atlantic hurricane season in the United States. But even if you don't live where a hurricane or a wildfire or earthquake, etc., are likely events, the events of the last 6 days should give you pause to reassess if you would still be able to control your Bitcoin if you had to flee a violent mob, or maybe if you were on the other side of the controversy and you found yourself swept up in a government raid and deported to another country with just the clothes on your back. Regardless of what you might think about the riots, it should give everyone a reality check that things aren't necessarily all that rosy. And even in the United States, you never know what tomorrow might bring. Rich Dad Poor Dad author Robert Kiyosaki issued a dire warning on social media while calling Bitcoin the quote only safe haven, tweeting on Monday, "Civil war has begun. ICE raids in Los Angeles erupt into mass violence. Big question. Will it spread? My answer, I believe we and the world are in for a long, hot, violent summer. This turmoil is described in The Fourth Turning by Strauss and Howe, who posit that society operates in a series of 80-year cycles. Past fourth turnings were the Great Depression/World War II, the Civil War, and the American Revolution. As you may know, riots are breaking out in Japan, China, France, and other countries around the world. Fourth turnings occur when societies are resolving major issues of that time. I believe, as do many others, the major issue being resolved is, quote, what is money? The issue is our bankers are stealing the wealth of the people via fake money, counterfeit money, and central bankers print. I trust the era of bankers ripping off the world is coming to an end. Sound money, gold, silver, and Bitcoin take away the power of, there's a few typos in here, I guess. Take away the power of from the corrupt bankers. As I have said for years, gold and silver are God's money. Bitcoin is people's money. Take control of your wealth. Stop allowing bankers to steal your wealth via taxation and inflation. Become your own bank. Stop saving fake money. Save gold, silver, and Bitcoin. Then you will turn ahead of today's fourth turning. Take care." Of course, he followed up that tweet today, tweeting, "Your future is decided today." Saying it another way, today is the most important day of your life. Please do not waste it. Today, I am buying more Bitcoin and working on a new book, Entrepreneurship. What are you doing today for your future? You are important. Your future is important. Please make your today a great day. Take care. So clearly, Robert Kiyosaki, well-versed in the things us plebs hold dear, referencing inflation, the money printer, counterfeiting, and the fourth turning, all in one tweet, and relating that all to the not just the riots in Los Angeles, but the general unrest that we're seeing around the world. You know, whether you believe in the fourth turning or you believe that, regardless of what you believe, if you were a Bitcoiner and you believe that we're going to see hyper-Bitcoinization one day, you know that the reason that we're heading there is because fiat currencies, they always collapse because you can't trust you can never trust any human politician with the power to print money. So regardless of whether we see riots like we're seeing in the United States and other places in the world, or whether we just see chaos as the result of the weakening of the US dollar and other fiat currencies. The point being, regardless of what the trigger is and regardless of exactly how that plays out, things will probably get worse before they get better, unless you're a Bitcoiner, in which case, well, you're still going to have to live through you're still going to have to live through the potential chaos of neighborhoods burning or whatever that translates into. But at least you'll know that your money is safe, that you won't be watching your life savings absolutely vanishing. You won't be wheelbarrowing, pounds and pounds of almost worthless paper bills to the store to wait in line for a loaf of bread. You have saved your savings in a currency that will continue to appreciate, and as everything else trends to zero in Bitcoin terms. I'm getting, of course, way ahead of myself. We do have a lot of really interesting things to talk about today. And, it's getting kind of late here on the East Coast of the United States. So I'm running up against the hard deadline being midnight, because we're going to be flat out at DCA Wednesday before too much longer. So let's move things right along and take our customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 900,863. 863 blocks since Bitcoin reached that 900,000 block milestone. TikTok next block, and Bitcoin's currently ringing in at a US dollar price of 108,700 US dollars, about 3,800 US dollars higher than last DCA Wednesday. That means that every paper dollar we convert into Bitcoin today will purchase us 920 sats. 33 sats fewer than last DCA Wednesday, which, that's the occupational hazard of waiting to stack. The longer you wait, the higher the US dollar price of Bitcoin gets, the fewer Satoshis you're going to be able to stack for those US dollars. But, when Bitcoin eventually hits, well, it would have to hit $100 million for Bitcoin to be on the sat dollar parity. When Bitcoin hits $1 million, we'll be on the Bitcoin cent parity. So that would be 920 cents for every 100 cents you're converting into Bitcoin, which is a pretty awesome return. But if you think about it, if you believe that Bitcoin will basically eat the entire global financial system, that Bitcoin will become the dominant global reserve currency, then $100 million Bitcoin is just the beginning. And at that point, each dollar you're converting into Bitcoin today will be worth $920 in that future. So that's pretty cool. Again, I'm not making a price forecast here. It's just, I believe Bitcoin's one of those all or nothing propositions that Bitcoin's either going to eat the global financial order or it goes to zero. I don't think there was any in between. And every day, every block that progresses, the chances of going to zero, unless we do something stupid like shoot ourselves in the foot. And that's a whole nother sore subject to talk about maybe in a different episode. But the point being, the longer Bitcoin survives, the stronger it gets. So for me, the proposition of it going to 100 million US dollars one day becomes more and more certain. Maybe in my lifetime, maybe not in my lifetime, but eventually. Bitcoin's current price gives it a market capitalization of $2.16 trillion, up substantially from the $2.08 trillion last DCA Wednesday. That is the 5th week in a row that we've been above that magic $200 trillion mark, which, I thought, $1 trillion Bitcoin was pretty significant for me, but 2 trillion seems to be one of those magic numbers. We've spoken about magic numbers on past episodes. Those are numbers that ring, that play on human psychology, that appeal to people. I often quote the line from the movie The Right Stuff about the original Mercury 7 astronauts, and before that, Chuck Yeager breaking the sound barrier for the first time. And there's a scene where Scott Crossfield breaks Chuck Yeager's record by flying Mach 2. And the reporters are talking about it, and the one says to the other reporter, "Well, Chuck Yeager will just go back up tomorrow and go maybe go a little bit faster, set a new record." And the first reporter says, "Yeah, but Mach 2 was that magic number," and he goes to relate that to like other statistics that people just have an affinity for, and saying that people like a nice round number, and 2 trillion as a market cap is one of those magic numbers that nobody can look at an asset with a $2 trillion market cap and not take it seriously. But it also just has that really nice ring to it, that appealing ring to a nice round, even 2 trillion. For those of you who value your wealth in shiny yellow rocks, like Robert Kiyosaki apparently still does, even though he quote unquote diversifies into gold, silver, and Bitcoin, It will currently cost you 32.3 ounces of gold to purchase just one Bitcoin, more than 2 full pounds of gold for every single Bitcoin. 32.3 1-ounce gold coins to purchase just one Bitcoin. And of course, I firmly believe we're going to be talking about, we're going to be talking about many pounds and eventually even tons of gold when we're talking about Bitcoin as Bitcoin continues to eat the global financial order, as things tend to continue to trend to zero in Bitcoin terms, gold included. And that's even with gold setting new all-time highs. Of course, I've spoken about this in the past, that gold has been the best store of value, the best hedge against inflation of the last 5,000 years. And that one of the things that is really cool about Bitcoin is it takes every one of the properties of gold and improves upon them. You know, gold has shortcomings. Like if you want to move $1 billion worth of gold, it basically takes armies to do so. And if you want to move $1 billion worth of Bitcoin, you can do it in a few clicks, depending on how depending what your custody strategy is. Just a few strokes of the keyboard, and you can send it anywhere in the world almost instantly. Of course, if you walked into Steak and Shake and wanted to buy one of their steak burgers and their tallow fries, and you wanted to pay for it in gold, first of all, they don't accept gold, but if they did and you walked in with a 1-ounce gold coin, you wouldn't be able to break that down into the $20 or whatever you're going to spend on lunch that day. And of course, gold, it's always had that problem, which is why other monetary metals like silver and et cetera have also served as currency in the past, because gold was just too expensive for the small day-to-day transactions. So that's why you paid with pieces of silver, et cetera. But Bitcoin doesn't have those problems. You can send, a fraction of a Bitcoin as little as 1 Satoshi. And if you're making transactions on a second layer solution like Lightning Network, you can send even millisats. All right, for those of you who value your wealth in something a little more pragmatic than Bitcoin or gold, 1 Bitcoin will currently purchase you 6,079 large pepperoni pizzas from Papa John's. If you remember, just a couple of weeks ago on May 22nd, we were celebrating the 15th anniversary of Bitcoin Pizza Day, where Laszlo made the first ever real-world Bitcoin transaction, purchasing 2 Papa John's pizzas for a whopping 10,000 Bitcoin. Of course, today we've got almost the complete flippening, where 1 Bitcoin will purchase you 6,079 large pepperoni pizzas from Papa John's. And if you tried to spend 1 whole Bitcoin eating pizza and you purchased 1 pizza every day, it would take you more than 16 and a half years to spend 1 whole Bitcoin. And if I've in previous episodes gone over why I think that's actually an impossibility, that because those 16 years are going to see the next 5 Bitcoin halvings. And either the halving cycle will continue, and every 4 years we're going to see Bitcoin soar to a stratospheric new all-time high, or we achieve the super cycle where the halving doesn't matter anymore and Bitcoin just goes up into the right continuously. Forever, Laura, forever, as Michael Saylor so famously said to Laura Shin. But either way, if the price of Bitcoin was frozen in time in US dollar terms right now and never gained another penny in value, it would still take you 16 and a half years to eat 1 Bitcoin by eating 1 pizza every afternoon. So that's pretty cool to know. If nothing else, if you have 1 Bitcoin, you can feed yourself or maybe a family of 4, depending on how much you eat, every day for more than a decade for just 1 Bitcoin. Okay, that metric has been my favorite for the entire history of this podcast, going on just under 4 years now. Bitcoin's 24-hour average on-chain transaction rate is up a little bit from last DCA Wednesday. Last Wednesday, we were looking at 4.04 transactions on chain every second, and that is up to 4.3 transactions today. Again, holding with my hypothesis, not really a hypothesis, but with my observation for the history of this podcast, that when on-chain transaction volume is up, the price of Bitcoin is pumping, and when the volumes are down, the price is descending. And certainly we're seeing that today. And again, that's taking into account or not taking into account the fact that, for example, I mentioned if you're going to Steak and Shake, you're probably paying for your double steak burger and tallow fries using the Lightning Network. And so those transactions, unless you're opening or closing a channel, don't reflect in that 24-hour on-chain transaction metric. So pretty cool that there's 4.3 transactions processed on-chain every second right now. And that doesn't even include probably the vast majority of transactions anymore, since so many plebs are using Lightning. Speaking of on-chain activity, Bitcoin's mempool is absolutely chock full compared to last DCA Wednesday. Last DCA Wednesday, there were about 1,800 transactions pending in the various mempools, and this week, Clark Moody's dashboard is showing 4,472 transactions pending, where mempool.space is showing 4,457 transactions pending. So more than double the number of pending transactions in just the last week. That makes sense because we're talking about more on-chain transactions, and only so many transactions will fit in a block. So it makes sense that when there's a spike in on-chain activity, some of those are gonna build up. There'll be a little bit of a traffic jam trying to get into the blockchain. And of course, it's nowhere near as bad as, well, I mean, you remember in January when there were more than 100,000 transactions pending. So 4,000 really isn't that many, but considering it's double the pending transactions last weekend, it was certainly significant, if not a big deal. If you do need to send an on-chain transaction and you want to guarantee that it is mined in the next block with those transactions starting to stack up, we're getting a little bit of a discrepancy between the two sources I normally quote. Normally, Clark Moody's fee estimator and Clark Moody's dashboard tends to be the higher of the two estimates. But right now, Clark Moody's dashboard is saying that you only need a fee of 2 sats per VByte to guarantee your transaction is mined in the next block, and that a fee of just 1 sat per VByte will be mined within a day. Mempool.space is saying it's going to be a little more expensive. They're saying that a fee of 3 sats per VByte is required to guarantee that your on-chain transaction is included in the next block or two. Still, that's only 46 cents in US dollar terms on average, which is pretty incredible since we just mentioned you could send $1 billion hypothetically anywhere in the world almost instantaneously. Nobody can stop you. You don't need a third-party intermediary to do so. And you can do it just for 46 cents. Of course, you can do it even cheaper if you're willing to wait a little while. Mempool.space is saying a low priority transaction could still include a fee of just 1 sat per VByte. And that works out to about 15 cents, which is just insane considering the power you have at your fingertips when you are sending an on-chain Bitcoin transaction. And again, if you're sending a Lightning transaction, if using a second layer solution such as Lightning, it's going to cost you mere Satoshis to send that transaction. So practically free. Since, well, I guess not. I was going to say since the last DCA Wednesday, we've had a difficulty adjustment, but we have not. There has been no difficulty adjustment in the difficulty it takes to find the next Bitcoin block. But we're only 289 blocks away from that next mining difficulty adjustment. If you don't know, if you're just following us for the first time, hello, welcome aboard. But Bitcoin, the Bitcoin Core protocol, or NOTS protocol, if you're switching to NOTS based on all the Bitcoin Core drama we've seen unfold in the last couple of weeks. But either way, Bitcoin adjusts the difficulty that it takes to mine a block every 2016 blocks, which theoretically works out to about once every 2 weeks, with the idea of having one block come in every 10 minutes on average. Of course, sometimes blocks come in right, one after another, sometimes within a minute of each other. And other times we've seen it take more than an hour for a block to come in. And that is why they want a larger data sample, that it takes 2016 blocks to come up with an accurate average. And I mean, Bitcoin's been going for 15 years, and this seems to be one of the more genius parts of the Bitcoin protocol, this difficulty adjustment, because I've been around for several cycles now, and every single cycle, the FUD comes out that the miner reward is going to be cut in half at the next halving, and therefore the miners are going to be unprofitable, and miners are going to start shutting down. And that means those blocks are going to come in slower and slower, which means more miners are going to shut down, which means eventually we'll get to the point where it stagnates and no block is ever mined again. And of course, we've never seen that happen because the mining difficulty adjustment has just worked so well. But either way, in about a day from now, another 289 blocks, we are looking at another adjustment. And depending where you get your data, it's either going to be a very small increase or possibly even a difficulty decrease. Anything can happen in the next 289 blocks. They could start crawling and we could end up seeing a significant decrease, or they could come in really quick and we could see that increase. But right now, in the last almost 2,000 blocks have averaged 10 minutes and 4 seconds. So pretty close to that 10-minute average that Bitcoin wants to see, just a little slower. So if that holds, we would see one of those rare, but they do occur, difficulty decreases where it gets just a little bit easier to mine a block. So they speed up a tiny bit. Speaking of that hash rate of the computing power that safeguards the network that's out there seeking those blocks, it's currently estimated there are 872.1 exahash of computing power securing the network. That is up from last week when the estimated hash power was 864.8 exahash. But looking back over the last year, I was looking a year ago on the DCA Wednesday that corresponds most closely to this one. We were talking about 597 exahash securing the network. So we've had an increase of 275 exahash in the span of a year. That's a 46% increase in the amount of computing power securing the Bitcoin network. So it's one of those things, if you zoom out far enough, the price of Bitcoin in general has always gone up and to the right. Yeah, we have those Bitcoin bear markets, those crypto winners, those sideway markets. But if you zoom out far enough, you get that stair step action up and to the right where Bitcoin is always looking to set that next new all-time high. And similarly, the same thing has happened with computing power. From time to time, the amount of computing power securing the network has reduced. A few years ago, we had the China miner ban, where the majority of the hash rate was located in China. China made it illegal to mine in China, so the vast majority of that hash rate had to relocate. So we saw almost a 30% decrease in network hash rate for a very short period of time, a month or so until those miners are relocated. And then when we had the ice storm in Texas a couple years ago and all the commercial mining farms in Texas shut down so that their power could be used to stave off rolling blackouts, we saw not quite as big as a 30% decrease in hash power, but a significant enough decrease in hash power that for a little while we saw one or two difficulty decreases. But in general, that hash rate is soaring up and to the right, just like Bitcoin's price, which is why usually we're looking at an increase in the difficulty to mine Bitcoin as both the number of specialized mining rigs, ASICs, are added to the network and those ASICs become more and more powerful. It's inevitable, as Elon Musk likes to say. Before we move along, I want to take a minute to thank those of you listening to this podcast on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to contribute value back to this podcast and your other favorite podcasts by either streaming Satoshis on a minute-by-minute basis as you listen, or by sending a boost, which is a shout-out via a Lightning transaction. But because it is a Lightning transaction, in addition to saying hi, in addition to that shout-out, you're also sending value back in the form of Satoshis. Of course, just like the streaming option, this is a you do you thing. You determine the value you receive from listening to this podcast, the value that you want to contribute back, whether it's a Satoshi a minute, or whether you send a shout-out of 500 sats or 1,000 sats or 10,000 sats. That is completely up to you. But of course, when you do send a boost, we will read it on the next episode of the Bitcoin Bulletin Podcast. We don't have any boosts to read today, but thank you to those of you who have continued to contribute value back to this podcast in the past. And even if you don't feel like contributing value back, supporting your favorite podcast in a value for value method, you should be listening on Fountain instead of Apple Podcasts or Spotify or wherever the normies are listening, because in addition to being able to contribute value back, Fountain also allows you to earn a few Satoshis here and there just for listening to your favorite podcasts. Fountain is not a sponsor of this podcast, but I personally listen to all the podcasts I listen to on Fountain because for the first hour a day that you listen to podcasts, they randomly assign a number of Satoshis that you can earn per minute for however long, the first hour, first 10 minutes, whatever is randomly decided. And from time to time, you can earn 10 Satoshis or 100 Satoshis or more just for listening to your favorite podcast. And then you can do whatever you want with those sats. You can accumulate them and send them off to your hardware wallet. You can spend them at your favorite coffee shop that accepts Bitcoin or at Steak and Shake, for example. Or you can contribute them back as value for value, as I said. Speaking of you, the listener, while a lot of us would like to see the Bitcoin core protocol ossify with all the shenanigans that have been going around the op-return debacle, our geographic distribution of listeners is certainly ossified. This tends to happen from time to time. It seems like we go 6 months or so without any real shakeup, and then all of a sudden there will be a big move in our top 10 listeners, our top 10 countries by listenership. This is not one of those weeks where we see a change. Our top 10 countries where our listeners are located remains as follows. Number 1 remains the United States of America, where a little more than 50% of you are listening. So hello and thank you to my fellow Americans listening in whichever state you happen to be located in, whether you're here in glorious Florida with me and 30 million other Americans, or whether you're located in LA and you're hoping to make it to work tomorrow and that the freeways aren't blocked by the protesters. Wherever you may find yourself, thank you very much for listening. Number 2 remains Singapore. They were one of those big changes. They kind of came out of nowhere and they surged all the way up to this number 2 spot where they remain. So apa kabar? Thank you to those of you who are listening in Singapore in numbers sufficient to keep you at the number 2 spot. Number 3 remains Germany. So Dankeschön, mein Freunde in Deutschland. Number 4 remains Argentina. So hola, muchas gracias amigos in Argentina. Number 5 remains Luxembourg. So Dankeschön, mein Freunde in Luxembourg, or Morgen to those of you who speak Luxembourgish. Number 6 remains Canada, where hopefully the weather is back to nice. I was listening to a podcast the Canadian Bitcoiners podcast the other day, and I think it was Len was lamenting that the weather had gotten gloomy in Canada. It cooled off again a bit, but hopefully that weather is it's June, right? So hopefully the weather is glorious up there just north of the United States. And thank you for listening in numbers sufficient to keep you at the number 6 spot. Number 7 remains our cousins across the pond in the United Kingdom. So hello and thank you to all of you listening from the UK. Number 8 remains Spain. So hola, muchas gracias amigos en España. Number 9 remains Australia. So hello and thank you to those of you listening down under. And rounding out the top 10 remains Mexico. So hola, muchas gracias amigos en Mexico. Of course, we have other countries lurking just below the top 10. Well, we have listeners in almost every country I can think of. Scrolling through, looking at the listenership, it just keeps going and going and going. And it might only be a fraction of a percent of our listeners, but I can't think of a country and off the top of my head that isn't in the list. So, and some of you are really close to breaking into the top 10. I'm looking at a couple of you huddled down right below Mexico that it might only take 1 or 2 listeners, maybe a friend of yours, maybe a family member, to bump your country into the top 10. So speaking of contributing value back to the podcast, the easiest, cheapest way you can help support this podcast is by sharing this podcast with a friend or family member. And if you're in a country like Colombia that's lurking just a fraction of a percent below Mexico, maybe that'll be enough to bump you into the top 10. That would be cool to see. All right, on to the news. The big financial news today was, of course, the release of the official inflation numbers. And the official CPI numbers showed a slight decrease. Up until the minute that those CPI numbers came out, every media source I was looking at was warning us that inflation was expected to tick up, and that, of course, it was all Donald Trump's fault because of the tariffs. And while tariffs might raise the cost of things for American consumers, it just goes to show how much money it takes to swing those inflation numbers. And of course, we know they printed double the amount of money that was in circulation in just a few short months. I think it was 18 months during the previous administration. And that is the reason that we saw inflation, the average normie thinks inflation means that the price of your cheeseburger went up, the price of your house went up, the price of your new car went up. If you are a pleb, a Bitcoiner, you probably know by now that what is actually happening is the value of the money you're purchasing those goods with is going down. We talk about a hedge against inflation. We spoke about Bitcoin in that manner. We talked about gold in that manner in the past. But the fact of the matter is, what led to massive inflation in the United States in the last few years was the money printer, not a 10 or 20% tariff on certain goods coming into the country, especially since these tariffs are intended to be temporary. The whole idea behind these tariffs wasn't to punish countries permanently. It was to make them come to the negotiating table, because almost every country, probably every country that deals in trade with the United States has always had a tariff or other trade restrictions against our products. There are certain products you can't sell from the United States and other countries, for example, whereas the United States in the past has let other countries trade freely in our markets, and that was considered to be an unfair advantage. President Trump thought that was unfair, and so the reason why he proposed the tariffs was to say, if you are going to put a 20% tariff on our goods, we're going to hit you with a 20% tariff. He called them reciprocal for a reason. So it is my expectation that eventually, this takes time, this has to all be negotiated, but I don't think these tariffs were meant to be permanent. And so if countries come to the negotiating table and those tariffs are relaxed, I would expect them to have a very little, if any, effect on inflation, certainly compared with the effects on inflation we see by rampant money printing. And rest assured, we will see rampant money printing. It's only a matter of time before we see quantitative easing ramp up, especially as the real estate market begins to soften, as consumer debt goes through the roof, as the fact that the high interest rates that the US government is having to pay on its existing debt are eating up more and more of the federal budget. It's only a matter of time before we see them try and print their way out of this mess. And then we'll see inflation. And of course, they'll blame the tariffs, but it'll in fact be the money printing. All right. Usually, when we talk about the news is the price, and the price is the news. And if you were on Twitter, there were a lot of people calling this cycle over. I mean, they started calling this cycle over back in January before we, of course, went on to set the new, most recent all-time high a couple of weeks ago in the end of May. But I also even saw somebody with a ridiculous theory that Bitcoin runs in 14-year cycles, and that this is the end of the 14-year cycle, and then Bitcoin was going to go for one 14-year cycle and then go to zero. And he said 109,000 was the highest we were ever going to go. We were never going to see that high again. And of course, he was wrong. Bitcoin climbed to a little over 110,400 before retracing to its current value. But it got within striking distance of setting another new all-time high. And I'm quite frankly surprised that it didn't, not because of any particularly any kind of transaction analysis or any feeling other than the fact that today is our DCA day. Today is the day we're going to buy Bitcoin regardless where the price is. And it just seems like Murphy's Law says that, if we're going to set an all-time high, it's going to be on Wednesday, and it's going to happen right before we do our DCA stack. All right. Speaking of stacking Bitcoin, a lot of people were disappointed with the tease that GameStop did. GameStop sitting on this gigantic pile of cash, and then hinting finally that they were going to purchase Bitcoin. And they finally did, but they basically, considering how much money they were sitting on, how many US dollars they were sitting on, their purchase was pretty weak. But apparently, as of this afternoon, it's looking like GameStop is potentially purchasing up to another billion or $1.75 billion of the Bitcoin, or planning to, with MarketWatch running the headline, GameStop hints at its next Bitcoin buy, the stock is tumbling. GameStop Corp late Wednesday said it plans to raise more debt, a move that could indicate another Bitcoin purchase is looming for the video game retailer and original meme stock. The Texas-based company announced the proposed private offering of $1.75 billion of convertible senior notes after market close Wednesday. Proceeds will go to the general corporate purpose, including making investments in a manner consistent with GameStop's investment policy and potential acquisitions, the company said in a statement. This is not the first time that GameStop has raised debt this year. On April 1st, the company completed a $1.5 billion bond deal. It then announced its first purchase of Bitcoin. Of course, the stock tumble reference was because the people are afraid that they're going to be diluting the shares. But what we're seeing is GameStop potentially following the Michael Saylor playbook, offering convertible debt and then theoretically using that money to purchase Bitcoin to increase their Bitcoin treasury. Currently, GameStop owns 4,710 Bitcoin, which is a lot of Bitcoin for you and I, but a paltry sum considering that they've raised billions of dollars and that they were already sitting on billions of dollars of cash, that melting iceberg, that melting ice cube, like Michael Saylor likes to refer to it as, cash that's losing its purchasing value to inflation. And for whatever reason, GameStop felt like only purchasing 4,710 Bitcoin instead of going all in, even though they'd kind of teased that they were going to follow the Michael Saylor playbook. Of course, not everybody gets it. On Tuesday, we've heard that Connecticut went 180 degrees of the rest of the country and actually passed a law banning a strategic Bitcoin reserve, banning state investment in Bitcoin, passing House Bill 7082, which prohibits the state from accepting, holding, or investing in any virtual currencies. It also imposes several new requirements on money transmitters. So they say you get Bitcoin at the price you deserve, and apparently Connecticut is going to be one of those late adopters before they eventually are forced to bend the knee, like everyone will be eventually. So now's your chance to front run Connecticut, every other state in the union. All right. On to what makes today and every Wednesday special, and that is that Wednesdays are dollar cost average Wednesdays. What is DCA, you might ask? Well, DCA, or dollar cost averaging, is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, We set our equal portion at just 20 US dollars because I wanted to show that even if you don't have a lot of money, as long as you can come up with just 20 US dollars a week, you can eventually build an appreciable stack of Bitcoin. And we chose weekly as our regular interval, once a week on Wednesdays to be specific. And again, both these things are you do you things. I'm not suggesting, of course, this is not financial advice, but even if it were, I wouldn't be suggesting that you stack just 20 US dollars because obviously someone like Michael Saylor isn't going to stack just 20 US dollars a week. These are you do you things. If $20 is a lot of money for you, maybe you stack $5 a week. I don't know. Again, this is up to you. But if $20 is nothing, if you blew $40,000 on lunch at the Tavern on the Green or whatever, then maybe you would pick a number that's significantly higher. The point being, you pick a fixed amount and you invest it consistently over time. And we chose weekly on Wednesdays, but a lot of people that I know, the average fiat miner gets their paycheck once every other week. So if that's your case, maybe you invest every other week. There's other people I know that DCA daily, and there's even services that will let you DCA hourly. I think DCAing hourly might be a little extreme, but again, these are you do you things. For us, we chose $20 and we chose once a week on Wednesdays. And this is going to be our 203rd Wednesday stacking Bitcoin. We started all the way back on Wednesday, July 28th, 2021. And in the 202 Wednesdays since then, we've converted a total of 4,040 US dollars, just $20 a Wednesday, and converted that into a stack of more than zero point 0.1 Bitcoin, 10,730,190 Satoshis to be precise. If you don't know or you haven't done the math, there are 100 million Satoshis in every Bitcoin, so 10 million is 0.1 Bitcoin. So we stacked 0.10730,190 Bitcoin, or as I prefer to call it, 10,730,190 sats. Perhaps as importantly, though, we did so at an average purchase price of just $37,650.78 because we started this DCA journey between the double highs of 2021. So we started purchasing at about 39,000 US dollars, and we purchased all the way up to the 2021 all-time high. Then we purchased all the way down through the crypto winter, so to speak, the Bitcoin bear market, and then the Bitcoin crab market, the sideways market. And now we're purchasing all the way up again, all the way to whatever the new all-time high will be. The point being, you stack consistently and that you don't really pay attention to price. As they say, time in the markets beats timing the markets every time it's tried. And the fact that our average purchase price is only 37,650 US dollars certainly goes to attest to that, I humbly believe. And the fact that at just $20 a week, we've stacked a tenth of a Bitcoin which is worth more than 11,000 US dollars, by the way, is not too shabby either. So to grow that stack once again this week, I'm going to use the Strike app. Where you purchase your Bitcoin is a you do you thing. We don't have any sponsors of the Bitcoin Bulletin Podcast. I have no reason to choose an app to stack on other than I choose what I think is the easiest and most cost-effective manner to do so. For most of the history of this podcast, we use the Cash App. Cash App is definitely one of the easiest ways to stack sats. But as you know, if you've been listening to this podcast, they recently doubled the fees for stacking on Cash App, and they were already one of the more expensive ways to stack. There were some reasons I thought that the fees were outweighed by other benefits that Cash App was providing, but once they doubled their fees, it was time for me to move on. So we chose Strike. Strike is charging us about half the fees what Cash App used to, and in significantly less than what Cash App currently does. So we're going to use Strike. These are you do you things. If we're purchasing just $20 a week, the fees are a smaller portion of what is important to me in determining how I'm going to stack what app or what exchange I'm going to use. If we were stacking $10,000 of Bitcoin, for example, fees would become way more important to me. And then maybe I would be using an exchange like the Evil Empire or Gemini or Kraken. But again, those are all you do you things. We're going to use Strike. So I already have Strike open and I have money on Strike already, although they will let you transfer money directly to Strike and invest it immediately once you have that all set up. So for me, it's just a matter of, well, it's already open to the Bitcoin page. So just a matter of tapping buy, hitting $20, tapping next, And boom, just like that, we've added another 18,223 Satoshis to our stack. That brings our stack of sats up to 10,748,413 Satoshis. At the current US dollar price of Bitcoin, that's a stack that is worth 11,684 US dollars. And considering we have now converted 4,060 US dollars into Satoshis, that is not too shabby. That's more than 2x. That's 2.6x to be exact. And of course, if you believe like I believe the Bitcoin is, you ain't seen nothing yet, let alone for this cycle, let alone 4 years from now or 10 years from now what the price of Bitcoin is going to be. But because we purchased at we purchased at a US dollar price of $108,708.77. Our effective purchase price is a little more like $109,751 because of the 1% fee that we paid to do so. So that's going to raise our average purchase price a little bit. In fact, it bumped our average purchase price up by $122.24. So now our average cost basis is $37,773.02. Still not too shabby, considering the current US dollar value of Bitcoin is almost 109,000 US dollars. So speaking of the future and the future purchase price of Bitcoin, of course, this isn't about the fiat price for me, and it shouldn't be for you either. It should be about securing your family's fortune in a manner that doesn't allow governments to steal from you through inflation, to inflate the hours of your life away, because that's really what your savings are. They're not US dollars, they're not Satoshis, they're hours of your life that you worked, that you traded for either fiat or for whatever you get paid in at work. Maybe some of you are actually working for Bitcoin, but the point being, you've traded hours of your life for a representation of that time that you can maybe spend on something you want in the future. And by printing money, fiat currencies steal those hours of your life by devaluing the purchasing power of those stored hours of your life. On the flip side, if Bitcoin continues to trend towards infinity as it eats the traditional financial system, the US dollar purchasing power equivalent of your Bitcoin will continue to soar. For example, you already have more than $11,000 in purchasing power for just those 4,060 US dollars worth of Satoshis that we purchased. But when Bitcoin eventually hits 1 million US dollars, and there are those who think that'll happen this cycle, I would be highly surprised if it does. But I've also said that I feel that we're kind of repeating the year 2017 and the 2016 halving cycle. If that happens, remember 2017 started the year at 1,000 US dollars and went all the way to 20,000 US dollars. So a 20x between January and where the blow off top was in December. If that were to happen, we'll add a few zeros and your 1,000 is represented by 100,000. So 20x 100,000 would be 2 million. So maybe it's possible. Maybe we go as high as $2 million this cycle. Maybe we go even higher. I don't know. I don't have a crystal ball, but I am firmly confident that we will hit 1 million US dollars sooner rather than later. Maybe it's this cycle. Maybe it's the next cycle. Eventually it will happen. And when it does, our current stack of sats, without making one more single purchase, not stacking a single extra Satoshi, would have a US dollar value of $107,484.13. A pretty good return for just 4,060 US dollars. And of course, Adam Back, one of the Bitcoin OGs who's referenced in the white paper that Satoshi referred to as an inspiration for starting Bitcoin, the Bitcoin code in the first place, well, he predicted we're going to see $10 million Bitcoin. And when that eventually happens, our current stack would be worth more than 1 million US dollars. $1,074,841.30 to be exact. Of course, if you remember back in 2022, I believe it was. It was January 22. Fidelity Digital Assets, their director of global macro at Fidelity Investments, Jerry and Timmer, said that they believe that by the year 2038, one Bitcoin will be worth 1 billion US dollars, billion with a B, almost completely inconceivable at this point. But then again, when I first got into Bitcoin, well, I didn't even really think about it increasing in value. I was more interested in the freedom tech and the uncensorability, the ungovernableness, the libertarian aspects of Bitcoin, the freedom aspects of Bitcoin. And it didn't dawn on me till later that Bitcoin was going to eat the global financial system, that this was going to become obvious to everybody, and that the fiat currencies, by their very nature, were all going to eventually implode anyway. So $1 billion is not out of the question. Maybe not in my lifetime, but at some point in time, maybe by 2038, like Fidelity said, maybe later, maybe sooner. But if and when that does happen, our current stack of Satoshis would have a staggering US dollar equivalent of 107,484,130 US dollars. So if any of you are thinking that you're too late to Bitcoin, you ain't seen nothing yet. I've always said that even if Bitcoin only fulfills its role as digital gold, if it only becomes on par with gold as far as the amount of money that's invested in it, the amount of people that have it in their portfolio, Bitcoin has to 20x from where it's at, just to be on par with the amount of investment that people have sunken into gold. I believe it'll do more than that. And that's not an unreasonable belief, because there's plenty of data out there, plenty of polls out there that said the younger generation are not gold bugs. You know, that most gold bugs are the boomers. They hoard all the gold just like they own most of the real estate. There are plenty of young people that own gold. I'm not saying that's not the case, but I'm saying there are young people that own houses too. But the average boomer has 3 houses. So when the boomers pass and that money is handed down to their heirs, to future generations, the younger generations, the digital natives who grew up not ever knowing an analog world, not ever knowing a world before the internet, well, poll after poll says that they're more comfortable investing in Bitcoin than investing in gold. So it is likely that gold will be surpassed by Bitcoin sooner rather than later. But even if it isn't, even if it is just on par with gold, we'd be talking about $2 million Bitcoin. So you're certainly not late. All right. As usual, before we wrap up, I'd like to take a minute to thank those of you listening. But if you would please do me the solid of, wherever you're listening, to give this podcast a 5-star review, to rate and review this podcast, and share this podcast with a friend or family member. Of course, you will help boost your country, you potentially boost your country up into the top 10. But more important than that, you will help feed the algorithm monster. The more listeners we have, the more ratings and reviews we have, the more shares we have, the more likely that someone is likely to see this podcast when they're searching for content to listen to on their favorite podcasting app. Maybe somebody who thinks they're too late. Maybe somebody who can only afford to buy $100 of the Bitcoin and thinks it just isn't worth it. And maybe because you rated and reviewed this podcast or shared this podcast, a complete stranger sees this podcast and learns that by converting just $20 a week, we've amassed a pretty impressive stack of Bitcoin, and that they can do so too. All they have to do is get started to get off zero. That goes a long way. So maybe just by rating, reviewing, or sharing this podcast, you'll help orange pill another pleb, someone you might not even know. Of course, you can also help feed that algorithm monster by making sure you're following us on Twitter or X. And on Twitter/X, we are at BTC Bulletin Pod, BTC like Bitcoin, Bulletin Pod as in short for podcast, at BTC Bulletin Pod. Speaking of X, I absolutely love hearing from you. If you are not in the position to send a boost, to send that shout out, my DMs are open. I check the DMs on Twitter every day. They're open right now, and I do reply to DMs. I love to hear from you more than I love to see people contributing value back in the form of Satoshis. You know, right now I'm sitting here in the Bitcoin Bulletin Podcast studio in sweaty Central Florida. It is brutal soggy out. That's just what happens in the summer when hurricane season comes, and the flow of the airflow over the state switches from where the cold fronts move across the country and then push across Florida, to where you just get that onshore flow of hot, humid tropical air. So it's not unusual for the lows to be around 80 degrees and the humidity to be better than 90%. And it certainly feels like that's the case tonight. But nonetheless, I'm getting sidetracked. I'm sitting here in the studio. I'm looking at a monitor. I got my notes going, got my production set up on the other monitor. I'm talking into this wonderful Shure microphone. And that's all there is. But because some of you have reached out, whether it's by sending boosts or whether it's by sending emails or whether it's DMing me on Twitter, instead of just seeing that monitor, I see you, whether you're in Germany, Argentina, Luxembourg, Spain, the UK, Australia, Mexico, Argentina, any of the countries that you might be listening from. And that's what makes it all worth it. If you've been listening to this podcast, you know I love to talk and I love to talk about Bitcoin. If you know me in person, you know I like to talk, and that Bitcoin is one of those things I like to talk about. But it's very rewarding and very gratifying to know that you're out there listening. So say hi, shoot me a DM on Twitter, or if you don't use X, you can always send me a good old fashioned email. And my email, which is also open right now, is bitcoinbulletin@protonmail.com. Again, that's bitcoinbulletin@protonmail.com. Of course, most importantly, don't forget to join us next Wednesday and every Wednesday as we continue our Bitcoin journey, stacking $20 worth of Bitcoin as long as there is someone out there willing to trade their precious Satoshis for our paper fiat money. But until that time, keep on stacking those sats, you sexy sat stackers.